Welcome back everybody, hope you've been well. In today's video, I'm going to show you a textbook setup on NZD CAD using our 4-hour swing trading strategy. So without wasting any time, let's dive right into it. So before we get started on NZD CAD, I just want to disclose I did not take this trade. A bunch of our Currency Pros members took this trade and I decided it would make for a good case study to showcase the strategy itself. This is the 4-hour time frame. We are on NZD CAD. This is a very straightforward and textbook setup. And I'm going to show you exactly why step by step. So first of all, if we look to the left, we don't have to go too far left, but in this case, it's pretty obvious that we have a bullish uptrend. Now, with that being said, we need to focus on the current trading range. So with the help of the Currency Pros indicator, we can see that we're being shown the structural swing points within this current range. So that is of course from this low all the way to this high. I hope you can see those little triangle annotations on my chart. That is the work of the Currency Pros indicator, just one of the many features that it offers. Now that those swing points have been established, what we need to do next is double click on the indicator and enable the show fib levels setting. What that will do is show us the Fibonacci retracement that we have set. I currently have mine set to the 75%. There's two levels here. You could set it to something else if you want and have both to choose from if you have multiple entry points, for example. So now that that has been enabled, we need to take a look at the range itself and see if it's valid to trade. Because keep in mind, an indicator is not going to trade for you. It's not some holy grail thing that's just going to magically make you money. This indicator is programmed to do a very specific thing, but we still have to use our knowledge of the strategy itself and our knowledge of the markets in general to gauge whether or not it's a good decision to trade based on what the indicator is showing us. So in this case, we need to search for other confluence. Now, the confluences that I like to look for are an imbalance and or order block within the general area of my retracement. So the reason I don't enter off of the imbalance or enter off of the order block like most people do is because that's a very unreliable method of entering. I find that it's a much more easily predictable and frameable trade if you just enter off the same level every time. So in this case, I enter off of the 75%. So I will literally set my entry at that 75%. I'll drag my stop loss to the low of the range that we're trading within and drag my take profit to the high. And I'll simply adjust it so it's an even 3R, which you can see right there, a 1-to-3 risk reward ratio. And then I'll input these numbers into my trading platform and execute a limit order. So in this case, it would be a buy limit order. And that means I can set the order as soon as the opportunity has been presented by the indicator. And it could be a week ahead of time. It could be a few days ahead of time. And I can just set that limit order and then go about my life and just let it happen. So with that being said, let's play price forward and see how this one turned out. So as you can see right here, there was a big high momentum drop into that entry zone. In most cases, that's a bit of a warning sign that it's, an aggressive trade and it might be a bit risky. But overall, based on my results and my back testing results as well, it doesn't really change the outcome too much. It's more of a psychological thing. So whenever price is approaching aggressively like that, it can really psych people out and make you become fearful. But overall, it's best to just set and forget the trade and let it do its thing. So in this case, it just absolutely sniped that 75% entry. Now, just a reminder, you can choose whatever entry point you want. It doesn't have to be 75%. I only do that because it's deep enough in discount or premium if I'm selling, and it gives me a nice 1-to-3 risk reward ratio every single time. So there's no guesswork. There's no entering off of the imbalance and maybe getting 1.5R or entering off the order block way down here and getting like 7R or 8R. It's just inconsistent that way. I'd rather simplify the entry process and enter off of one level every single time, because that way I'm not over refining by accident. That often happens when you're trading order blocks. You over refine to the smallest possible order block just to get the highest risk reward possible. And then you end up missing the trade quite often. So that's why I kind of ditched that entry style and simplified it by just combining all my confluences and making sure they're in the general area of my retracement level. And that allows me to consistently get involved in trades and just focus on the best setups rather than focusing on the minute details of the chart work itself. Now, just for reference, the Currency Pros indicator also has an order block section. If I enable that, you'll see the order blocks with an OB label on the chart. So for those of you who want to visualize that, it's definitely there. For me personally, I can visualize it on my own. I don't need the indicator to show me, so I keep it disabled on my chart, but it's all personal preference. Now, anyways, back to the trade. We obviously got tagged in beautifully here. Keep in mind, I didn't execute this trade in real time. This is a case study based on the trade that my members took. A bunch of Currency Pros members capitalized on this opportunity using the indicator, which is so lovely to see. It makes me have like a proud dad moment. But let's continue to play the price forward and see how it develops. The main thing that I wanted to discuss with this trade, obviously you can see that it hit take profit now. And since it broke structure to the upside, we now have a new Fibonacci range being printed by the indicator, which is exactly what it's supposed to do. So if I enable the break of structure line, you'll see there's a BOS break of structure right here. So the indicator maps that for you as well. Again, just for the sake of simplicity, I personally keep it off because I don't need too many things on my charts. But we have so many options here for every level of trader. Back to the main thing that I wanted to talk about regarding this trade, and that is major high impact red folder news events. This is NZD CAD, right? And the Canadian dollar is heavily correlated to the US dollar. When the US dollar moves, the Canadian dollar is usually also moving. We're neighbors. I'm Canadian myself. I'm from Toronto, Canada. Although this is not a US dollar pair, it was affected by a US dollar news event, which in this case, if I remember correctly, it was CPI. This huge bullish candle here was CPI. Let me just turn off the fib levels here so we can focus on this current development. And I'll just manually draw the fib from here to here just so we can visualize the trade that just occurred. The reason I wanted to talk about the news event here is because most people get terrified when there's upcoming news. I know that a lot of prop firms have recently implemented some pretty iffy rules regarding news events, but my personal stance on trading around high impact news is to just let it do its thing. I mean, especially with swing trading, I actually really look forward to major news events because sometimes swing trading can be a little bit dry and boring. It can take a week or 2 weeks for the trade to play out. And, it can really test your patience. So whenever there's an upcoming news event like CPI, for example, or FOMC, NFP, it pushes the trade along. It's very rare nowadays that we see that huge whipsaw effect where it goes up and down, spikes liquidity on both ends, and just screws everybody over. What I've been noticing more often recently is that the news momentum will just push price in the direction that it was headed in anyways. More often than not, at least. So my view on news events in general has always been the technical analysis kind of prefaces that news event. So basically, and some might disagree with me on this, but I feel as though the outcome of these news events is already kind of pre-baked into the technical analysis on the chart. Within the market structure, the occurrences that are happening, the little minor details on the chart. So those things I believe are giving warning signs as to what the news event is going to be, because none of these things are a surprise unless it's war or a pandemic or some sort of black swan event, right? Those obviously shake things up. But when it's just economic data, those are well known ahead of time. So I don't fear red folder news, high impact news. I just let it do its thing. If my trade is right, then it just pushes me towards my take profit faster. And this is a perfect example of that. As you can see with this aggressive bearish move here, that alone might have scared people. But the thing is, it didn't break structure. It wasn't strong enough to continue pushing to the downside and violate this low. Instead, it bottomed out here and then ripped to the upside. So because this bearish move didn't create a new low, that means that this high up here is pretty weak, which means it's likely to get ran. All the news did was create momentum to give that final push through this high that was pretty much bound to be violated at some point. So that's the way I look at it. Again, I know that prop firms are a little bit strict on news events. I've been trading for about 6 years now, over 6 years, and I've always been focused mostly on personal capital. Prop firms are a newer thing for me. It's almost like a side quest. I'm always focused on my personal capital. And when you're trading with a brokerage account, you don't have rules around news events. So it's not something that concerns me. Now, one more thing I want to touch on in regards to the high impact news, it would certainly affect day traders more than swing traders. So if you're trading a position that has, let's say, a 5 pip stop loss or even a 10 pip stop loss, something in the area of that, then a high impact news event can certainly liquidate you pretty quickly and potentially even cause slippage, which means you lose more than you were initially anticipating to lose. Now with swing trading, the difference is my stop loss, usually it's in the range of like 30 to 80 pips, I would say. And that's just rough, but it can be all over the place depending on which currency pair that I'm trading. So it's hard to say. But because there's such breathing room for that trade, I can't remember the last time I experienced major slippage or a whipsaw effect from a news event that was significant enough to actually stop out my trade. It doesn't happen often. And if I were to get stopped out by a news event, that was a bad trade to begin with. So as I said before, it kind of just amplifies what's already happening on the chart. And this NZD CAD trade here is a perfect example. Price was moving slowly to the upside, slowly, just crawling its way to the upside with these small bodied candles. And then as soon as CPI hit, we see the momentum kick in and we see that big push to the upside, taking out that high. that's basically my philosophy on trading with major news events. It's not something to fear, especially if you're a swing trader. If you're a day trader, you of course need to plan a little bit more carefully. And if you're trading strictly with prop firms, you also need to make sure that you're adhering to the rules that they have set. Keep in mind, it is their company. They're entitled to set whatever rules they want. So it's more than fair. But if you don't want those rules at all, then of course you should sign up for your own account with a regulated broker and trade your own personal funds if you have the means to do so. So I hope you all enjoyed this video. I hope I provided some value. If I did, please like and comment down below. Hopefully something positive. I know I always say that, but I'm really trying my best here to provide value for you all. I hope that that's noticed. So yeah, if you enjoyed this, please leave a comment. And if you haven't already, subscribe to the channel. I'll continue pumping out these videos and doing the best that I can. Thank you all for watching, and I'll talk to you all in the next one.